Hey, Santa Barbara. So we are back with our October market update. We have been a little MIA on our market updates because we have been busy selling property, which is great, but also dropped the ball on our market updates. So that being said,
we're just taking care of our clients, and it's been a busy couple of months.
Yeah, definitely.
But we're back at it. Things have changed, and we're here to share with you what October of 2024 looks like.
Yeah, so it might be some good information, but to kick it off, as usual, we're going to have Jackie started off with our highest and lowest price sales.
All right. Well, our lowest price sale in October was a 2-bedroom, 2-bathroom townhome in Goleta for $729,000. And our highest sale was an incredible home on the Riviera. It was a Reginald Davis Johnson home. I think it was about 4 bedrooms, 6 bathrooms, absolutely gorgeous on an acre of property up on the Riviera for $9 million.
So if you have an extra $9 million, you could buy something really special on the Riviera. So,
yep.
That being said, our median sales price still hovering around $2.1 million. Not much change there for a single family home. How are we doing with the condos?
Condos are at $1.23 million for median sales price, which is a 36% increase from October of last year.
Wow.
Yeah.
So we're getting some higher price condo sales.
Higher price condo sales, I think those have at least remained steady as far as sales go over the year. It fluctuates a little bit, but condos are things that in our market are always going to kind of keep going and still see competition even when the market starts to balance out a little bit.
And I think that's probably obviously because they're the most affordable.
Right.
Right. So the most affordable way of getting into our market is through a condo.
Yeah, absolutely.
So total sales up quite a bit.
It was up a whole 113 total sales for South Santa Barbara County
for October.
And we are celebrating that. That's over 25% increase from last year and certainly an increase from most of the months of this year.
Yes, but I'd like to point out, though, for the sake of our audience and the content that we give, this year has relatively been pretty slow. Yeah. As far as number of transactions, I think we'll probably finish slightly above last year, which goes on record for being one of the slowest years of sales we've ever had in Santa Barbara since we've been tracking the data.
Historically,
the lowest year. So I think, it's nice to see 113 transactions, but definitely below what would be normal for what we would see this time of year. But, that being said, cash sales still pretty strong in our market.
Pretty strong. In October, it was 36%, which is actually kind of low for general in Santa Barbara. But that being said, year to date, it's still above 40%. So we're still, on average around 40% cash transactions. I think if you've been following our market updates, it was getting to a point where it was over 50% some months. So
yeah, and especially if you're in Montecito, it's usually around 60%.
Yeah,
exactly.
So I guess it's nice for buyers to know there's a little bit less cash transactions happening, but still, 40% year to date is pretty wild.
It's still a really solid number, and that kind of leads us into our inventory. I think inventory has been something that we've all noticed climbing slowly, not drastically, but if you talk to most clients, like, hey, I see more homes coming on the market.
Every email I get is, new listing, homes sitting for longer. Some things are taking price drops. So
a lot of things are taking price drops.
Yeah, I saw 21% of transactions sold over asking, but if you go to the sale to list price ratio, you can see that's like close to 95%.
Yeah.
So
which is still pretty solid. In a normal market, 95% is still pretty reasonable.
Right. Coming off of COVID, it seems like, oh my gosh, people are losing money left and right. But I think that's where the discrepancy between the 21% over asking is and the 95% sale to list price ratio is the mentality of the seller and the strategy they go with when they're listing.
Now, the original list price to sales price ratio was at 93.
Yeah.
So it'd be, we need to point that out because, like we said, properties are taking price drops. Some properties actually cancel and relist, and they might be at a different price. So if we look at overall original list price to sales price, we're at 93%. COVID times obviously would have been well above 100% on most list to sales price ratios in any neighborhood would probably be 105, 106%. Sometimes you saw 112, 113%. it's safe to say that that market pretty much is long gone. Right? It was an outlier. When you look at the graphs that we show on these screens, 2020 and 2021 are just off the charts.
Yeah.
And they're not real.
No, it was like such a strange world situation that went on. You're not going to recreate conditions that will, I mean, I guess you never know what's going to happen in the world, but in the things that you can predict, we're never going to see something like that, nor should we in a market. I mean, that's completely unbalanced.
It's unhealthy. Yeah.
To have an expensive market going for 112% over asking on every single home
and seeing 67% appreciation during those 2-year window. Like, it's just wild. So months of inventory increased. We're at 3 months, a little over 3 months of inventory, and 21% of our transactions for October sold over the asking price. Yeah. I'm going to dive quickly just into price per square foot because it is something that people are talking about more. So our price per square foot for a condo is about $963 a foot. And for a single family home, we're just about $1,300 a square foot for a house. Yeah. Which is pretty wild.
That's crazy.
So one by 1 foot, like 1 foot is $1,300. Pretty wild. That's expensive.
That is expensive. And it's interesting you bring that up because I feel like during COVID, nobody's talking about price per square foot. And as we get into this kind of shifting market, more buyers are talking about price per square foot. And although it doesn't necessarily transfer to our market as well as some of the urban cities or cities with newer developments that you can kind of gauge better, I think it's important to understand what price per square foot looks like.
I think it's just something good to keep in the back of your mind. It's like a cap rate, for example. It doesn't necessarily mean,
it's just a tool of measurement to know where you're at for this specific home versus this home or that neighborhood or something like that.
Right, and a low cap rate, for example, an investor could really want the building because there's so many other things that could be done with it as far as future development, but it's got a low cap. It's like 2% or whatever. It's not going to cash flow. It's just a quick way to look at something to say, if it's in line with the market. Yeah. And I think that's why I like looking at price per square foot.
Exactly.
Overall, though, what's your general consensus on the market? What do you think? How do you feel about that? Someone asked me about it, and I was just like, I would just say weird. Yeah. I didn't know what else to say.
It is weird. The market is weird. I think there's a couple things from just how we've been transacting in the market outside of just the data, which is sellers, if they are shooting for the stars still, they are definitely going to be missing the mark and they're going to be chasing the market down. And buyers see homes that are either overpriced or they don't look as great, and they're going to sit and wait. I mean, how many times have we heard, I'm just going to sit and watch it, or, oh, my clients are just watching that,
Or I don't need to buy right now.
There's a lot of I don't need to buy right now. I think a lot had to do with the election, and now post-election, we're getting close to the new year, and it's just buyers don't have to be forced to make moves like they were beforehand. There's one thing that I want to mention. I mean, we talked about, I don't know if we brought up days on market yet, but
no, we have not
days on market has been increasing slightly. It's still, 36 days for single family, 30 days for a condo. But from what I've been experiencing with buyers and hearing from colleagues is days on market's going to increase because insurance. I mean, right now there's a built-in 17-day insurance contingency in our contracts because of the insurance problems in California. But even that 17 days is pushing it. If you're in a huge majority of the neighborhoods here in Santa Barbara that have a high fire risk, might be in a flood zone, all of those types of things are contributing, because if you need to go fair plan, it's not that you're not going to get a fair plan, but it's that it takes at least 45 days to bind. So I think it's really important now for buyers to understand what goes into a transaction and everything you need to have in place, because you might want to put a short contingency or a short escrow, but is that the best to protect you?
Well, that and can you actually pull it off? And when your deposit's on the line in an escrow, it's probably the last situation you want to be in regards to asking questions on, can we pull this off? So I think doing your due diligence beforehand, being really smart and strategize with your agent correctly on how to really navigate the sale smoothly. Yeah. Insurance has got to be at the forefront of the conversation.
100%.
And it kind of leads me to think of a video you and I did about insurance. We could actually put it in the link here for YouTube. Where we kind of argued back and forth, not argued, but just
the way we do.
Yeah, we argue a lot. But just about our opinion on insurance and the effect it may have on prices. Where do you stand on that now? Just kind of bringing that up again.
You know what?
Now that it's been a year, 2 years now that we've been dealing with
it has, and it's getting more and more apparent in every transaction. I do think it's one of those things that could be used as a negotiation tactic. Like, for instance, I have a buyer right now that's in a precarious insurance situation, and every single buyer that goes to look at that property is going to be in the same situation. So it's kind of like having something in your back pocket to say, I know insurance is going to be hard to find on your property. This is why I'm putting in this protection. I don't necessarily know if it's going against the overall price, but I definitely think it's a negotiation tactic.
I agree. I don't think it's bringing down prices drastically. And I think
I'm wrong. I was wrong.
Well, it's still...
That's what we're looking for.
It's not. It's not
a year ago when we talked about this, I just wanted to point out that Jackie was wrong.
That she thought the market was going to tank because of this, right? It's not the point that I'm trying to make. The point I'm trying to make is Santa Barbara real estate market is so unique. People don't realize that. And I think someone actually put a comment on that video that I was like nervously scared about my opinion.
Yeah.
So whatever. We are a market that's insulated by
emotion.
No, not necessarily. Well, emotion's great. I wasn't looking for that word. I was going to say wealth.
Yeah.
People have a lot of money here. And the people that come to transact in our town have probably more money because they're buying 5th and 6th homes, which is pretty wild to think. So insurance to them is just the cost of doing business.
Yeah.
Not for everyone. Not for everyone.
Right.
But I definitely think on the sell side, you have people that have a lot of money as well. That example you brought up of the buyer that's in escrow looking for insurance, house has been on the market for quite some time.
Yeah.
So almost $2 million. Regular home sellers can't just sit on their home for sale 6 months, 7 months at $2 million and have already moved out and bought something else.
Yeah.
Those are people that have money. So knowing that, we both understand that about the market. I love that we have different opinions on it, but understanding that, you realize, okay, maybe insurance isn't much of a factor that's going to bring price down, but maybe more of a negotiation to get the price down somewhat. It's not going to drive prices down, but it'll allow you an opportunity to negotiate to your advantage, possibly. I was talking to an agent in our office. Insurance came through, was approved and ready to roll, but upon getting ready to close escrow, sent someone to drive by and said, hey, how old's the roof? And per the documents, no one knew the age of the roof. It was unknown. So that's what they responded. It's unknown. The insurance company said, upon close of escrow, you were to put a brand new roof on. It was over about 40 grand. So that allowed them to negotiate that with that seller to say, hey, in order for us to get insurance, we have to put a $40,000 roof on. How are we going to address this? So like I said, not driving prices down necessarily, but more negotiation taking place around insurance.
On that note, though, let's kind of work this out. Like, let's say I'm a El Cielito client, and I'm interviewing you because I want to sell my home, and I do need to sell it within the next 3 months for sure. What would you bring up insurance, or how would you talk to me about that? I know we're in a high fire zone, and I know that I have guys that come and I have to do clearance every year. So tell me, like,
I think the first call I'd be making after that appointment, once I signed the listing contract with them, because that's obviously what I would do, is call my insurance agent, and not just one, but probably 5.
Right.
And say, this is a property I have coming to market. We have this listing. I'd love to be able to offer your services as a viable option to obtain insurance. What do you think? Can you get it quoted? Are there any products? Is it fair plan? So I would have all that due diligence done up front in order to mitigate the negotiation on behalf of my seller with the buyer to say, hey, we've already exhausted all insurance options and we know we can get insurance on. Here's a few different.
Now, what if we couldn't get a good insurance plan? Then what would you say to me?
Then, I mean...
Like, what if we had to go fair plan and then a wraparound?
Expect a longer escrow. I wouldn't necessarily say that's going to deter someone from buying your house, because that's California right now. Everyone's getting fair plan. But for me, it's like, what do we need to do to speed this process up for our future buyer or the possible potential buyer?
Or commit. Make this a committed escrow.
By providing all that information up front and doing as much due diligence as we can, I think you attract a more committed buyer.
And just
know that escrow is going to be a little bit longer in order for us to really get that insurance bound or binded, whatever word you want to use. I don't know what's proper in that realm of insurance, but in order for that to be underwritten and approved, we need a longer escrow period. So something that home sellers are going to have to, home sellers and home buyers
Right.
are going to need to navigate and learn to navigate.
It's basically the same thing with a buyer, right? When I go and show
Same
a property that's in an area where I'm concerned about insurance, the first thing I'm doing is reaching out to insurance brokers and agents that I know and seeing what the heck they can do for us.
Put it to you this way: if it wasn't a big deal, it wouldn't be a contractual contingency
That they just
in our
added.
purchase agreement that just was recently put in there.
Right. But just because it's 17 days, that doesn't mean that that's what it takes. I mean, that's nice, but we're experiencing where 17 days can really push it if you're having issues. So keep that in mind.
Yeah, definitely. So kind of going back into wrapping this into our market update. Sorry, we segue to a little side movement there, but it's very important for what's going on in the market.
I mean, yeah, we're really seeing, even for condos, like you have to be really aware.
Condos are even harder than homes.
Condos are extremely hard to find
people
insurance
realize
for, and they don't have to be in a fire zone for it to be hard to find insurance for them. So really understand insurance, understand your contingencies, and make sure that your agent understands it and has brokers and agents that they can reach out to and exactly.
And really just trying to exhaust every option, because condos are the hardest.
Yeah.
I'm glad you brought that up. And that's bizarre, right? Because it's just the HO6 walls in policy. But to not be able to get insurance on a condo that's in a non-fire zone, it's just really weird. So yes, condos are probably even more challenging. So inventory increasing slightly, seeing more price drops. We have this whole issue with insurance. Overall market's still pretty solid though, as far as median sales price.
Yep.
Nothing really coming down. What do you think this means if you're a buyer in today's market? What would you say? What advice would you give or have for a buyer in a buyer consult about what it takes to win in this market?
It obviously depends on what they're looking for. If you're looking for a move-in ready home under $2 million, you're going to have a competition out there. And my advice is be prepared with your financing solutions. Be prepared with your family about what you do and do not want. Also be open to other options, because we are still in a low inventory market in the big scheme of things, although there are more options out there. So I would say that is still moving rather quickly. However, we still have the time to put our contingencies in place, do our inspections, and ultimately not feel like pressured into any situation. But we were just talking, I mean, there's a condo up on the Mesa, which is one of our big neighborhoods in town, 3 offers within the first week of being on the market. So it's not like means every single buyer has this long waiting opportunity. That being said, my other buyers that are looking for more unique properties are sitting a little bit longer. Things that need a little bit more of a vision. Those
take a little bit longer.
Those are sitting because buyers aren't as motivated. Buyers are finally at a point where they don't want to compromise. They want something that's just move-in ready. So I think that there's kind of 2 sectors still. The people that are open to unique properties or maybe something outside of like the general scope of move-in ready 2-3 bedroom type of thing. There could be some more possibilities. Things that are sitting on the market for over 35 days, I think you definitely have more of an option to get in there and kind of get some negotiating done. But the competitive market is still going to be the competitive market.
Yeah. Good advice.
What about sellers?
That's probably one of the hardest conversations right now.
Yeah.
Because sellers are still,
sellers always think their home is the
worth
best
more,
home.
and they always think it's the best, and more power to them.
Oftentimes,
we all feel that same way about our own home.
Yeah, when you live in a beautiful home for yourself.
You're proud. I get it. And that's what makes it even harder, because a lot of people are still expecting to pull in that record sales price. And not to say that it doesn't happen every now and then in this market. It's just not as common as it once was. And they're needing to change that narrative, or really understand that narrative has changed.
Yeah.
If you are a seller in today's market, you have more competition. There are more options for buyers. Buyers are less motivated. In my opinion, everyone during that COVID time that had to buy and wanted to buy in Santa Barbara and was willing to pay any price to get in, got in.
Yeah.
I think now those that are still on the fence, that are thinking, are the ones that are hey, we saw the house, but we're going to take our time to think about it, and we're going to go travel for a few months, and we'll be back. And
getting a good
see
deal
where we're at.
isn't the carrot that they had before.
No.
You had a low interest rate and it's a great deal. Now
there's really not too many of those like carrots, those golden carrots. Like, you're not locking in a low rate. Money's not really easy to just leverage.
Yeah.
So if you are paying cash, it's truly paying cash, and not having to leverage a stock portfolio or something like that, or refi options to recast and get your money back aren't cheap.
Right.
So if you're a seller, it's always going to come down to this: presentation, pricing, and what's the third one?
your marketing.
No, we're the 3 Ps. Why am I forgetting the 3 Ps?
Promotion.
We patent this. Sorry.
It's promotion.
Marketing. Promotion.
The 3 Ps
The
are
3 Ps:
price,
pricing,
presentation, marketing.
Presentation and marketing, but it's also promotion. It always comes down to that. And
Yeah.
I don't have the exact stat for you guys here. I wish I did write it down
What is
somewhere,
it?
but it's not here. In
What are you
regards
looking
to our weekly numbers, what we're still seeing is houses that are priced well on a weekly basis are traditionally selling within about 15 days. So out of the closed properties that take place every week, when we track that data, as far as average days on market, it's about 15 days. So as you mentioned, 36 days is our overall general price days on market. If you list your home and it's sitting and nothing happens after a month and a half, it's the market pretty much telling you your home is overpriced.
Yeah.
I'm a firm believer in that.
Unless you haven't done staging, you have some stuff to fix up. I mean, there are things that you could address with presentation, but if your presentation's dialed in and your home is sitting after 30 days,
The market will tell you.
it's price.
It's price. It
And that doesn't
always
mean
is price.
value necessarily. Your home could be valued more, but at this time, the market is speaking to you and your price is not enticing enough to make people transact.
So I guess my one sentence of advice to a seller would be to price aggressively.
Yep.
Right?
Yep.
Dial in the 3 Ps, price aggressively, and you will reap the benefits of a competitive market. You overprice your house, you will chase it downward.
Yeah.
And that is not a place you want to be.
And the first question a buyer's agent is going to ask about your home is, what's wrong with it? Why has it been sitting for so long? That will be the sentiment that comes when your home sits that long.
Yeah. So you don't want that to be you. I can guarantee you that. Your agent doesn't want that to be you. It's a tough conversation for us to be in. And unfortunately, it does take a toll on the relationship. So it's always best to listen to your agent up front as far as what they believe the best strategy is to go forward. That's my advice. Price aggressively. So that being said, I'm Abel Ramos with Compass.
I'm
This is
Jackie Potter.
my partner, Jackie Potter with Compass. We are super excited to be back with this
Yeah.
market update. And hopefully we don't have as big of gaps on the next few. But we're always here to reach out if you have any questions. So that being said, see you next month.
Bye. Cool. Cool. Cool.
Cool, 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 cool.